Hello and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host Daniel, bringing you the highlights and the happenings from around the world. Global markets endured a volatile week as tariff disputes, inflation concerns, and central bank actions dictated sentiment. US stocks tumbled under the weight of trade policy uncertainty, while European equities struggled with weak growth signals despite another ECB rate cut. Japan saw rising wage pressures that could accelerate monetary tightening, and China set an ambitious growth target while boosting fiscal stimulus. Let's dive into the details. US equities suffered their worst week in months as investors wrestled with tariff escalations, slowing manufacturing growth, and ongoing uncertainty around Federal Reserve policy. The US imposed 25% tariffs on Canadian and Mexican imports and increased duties on Chinese goods. Retaliatory measures from these key trade partners sent shockwaves through the market. While the White House later announced exemptions and delays, the back and forth eroded investor confidence. The February employment report showed 150,000 new jobs, below expectations, but above January's 125,000. The unemployment rate ticked up to 4.1%, suggesting a cooling labor market. The ISM manufacturing PMI dipped to 50.3, with new orders contracting, while the ISM services PMI climbed to 53.5%, marking its 8th consecutive month of expansion. The US dollar suffered its largest weekly drop since 2022, minus 2.4%, as growth concerns mounted, while the euro posted its biggest weekly gain versus the dollar since 2009. European equities faced headwinds as economic data painted a mixed picture. Meanwhile, the UK market slid as persistent inflation and cautious central bank rhetoric weighed on sentiment. The European Central Bank, ECB, cut its deposit rate by 0.25% to 2.5%, marking its 6th consecutive rate reduction. ECB President Christine Lagarde cited phenomenal uncertainty and trimmed the 2025 GDP growth forecast to 0.9%. Germany unveiled a €500 billion infrastructure fund and plans to loosen debt limits to support defense spending, sparking a surge in Bund yields. Eurozone inflation edged down to 2.4% in January, while core inflation fell to 2.6%, signs that price pressures are slowly easing. BOE Governor Andrew Bailey reiterated that inflation risks remain, making early rate cuts unlikely. UK mortgage lending hit its highest level since 2022, as first-time buyers rushed to take advantage of a stamp duty reduction before its March expiration. After a strong February, Japan's stock market saw mixed performance amid rising speculation of a rate hike. Japan's largest labor union group, Rengo, is seeking a 6% wage increase, the highest in over 30 years. If granted, it could prompt the Bank of Japan, BOJ, to accelerate its policy tightening timeline. The yen appreciated to the mid-147 range against the dollar, as risk-off sentiment drove demand. Yields on Japanese government bonds surged to 1.53%, the highest level since 2008, on expectations of further BOJ rate hikes. Chinese stocks rebounded as Beijing reaffirmed its 5% GDP growth target for 2025 and signaled additional stimulus measures. China raised its fiscal deficit to 4% of GDP, the highest since 1994, signaling an aggressive push to boost growth. The latest manufacturing PMI fell back into contraction territory at 49.6, raising concerns about the strength of China's economic recovery. Another major developer, Country Garden, missed a debt payment, reigniting fears about the real estate sector's stability. February's Consumer Price Index, CPI, will be a critical gauge of inflation trends. January's core CPI came in at 3.3%, slightly above expectations. If inflation remains sticky, it could delay potential Fed rate cuts. A key indicator of consumer strength, will spending continue to hold up despite higher borrowing costs? This release will provide insights into the performance of the manufacturing sector across the Eurozone. The final inflation figures for February will be published, offering a detailed view of price changes within the Eurozone. These data will provide an official update on the UK's economic growth at the start of 2025, as well as an update on the UK job market, highlighting recruitment trends and employment changes. An updated estimate of Japan's economic growth in the last quarter of 2024. While not a specific data release, the ongoing NPC may announce economic targets and policy measures impacting China's economic landscape. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.